In the past few years, there has been literally thousands of articles and headlines screaming that Jeremy Grantham is calling for an end to the mother of all bubbles, or that a recession is imminent. In this video, we're going to compare those calls to the markets today.
And that's the phenomenon that causes this very rare indicator of impending doom.
And we're going to see if Jeremy Grantham has actually made any right calls in the past few years. But regardless of his media track record, in interviews, Grantham is still a wealth of knowledge. And in particular, it is his deep historical insight and sheer breadth of knowledge on past crashes that hold his most profound wisdom, having lived through many himself. Grantham is the founder of GMO, an investment management firm headquartered in Boston. The firm takes a contrarian investing and generally bearish approach to the markets and holds views that assets will revert to the mean. Currently with $60 billion under management, offering different mutual funds for wealthy investors with a minimum investment size of $5 million. Grantham's most well-known historical calls include foreseeing the dot-com implosion and getting out of Japanese stocks in the 1990s before the economy stagnated. Beginning on June 3, 2021, Jeremy Grantham said housing was a bubble in almost every market, and said that the Nasdaq and SPACs had peaked in February 2021. He added that eventually there'd be a day of reckoning. The tech-heavy Nasdaq index did not peak in February 2021, but this Grantham call is still quite accurate. Reaching its all-time high in 2021, the Nasdaq dropped 35% over the following year. The Nasdaq remained slightly above its February 2021 peak that Grantham called, so overall not the day of reckoning that Grantham anticipated. As for housing, Grantham compared the state of housing markets across developed economies to the 2008 financial crisis. This time you look around and you find that real estate is suddenly pretty bubbly in almost every interesting market in the world. You can keep an asset class like housing, where the house doesn't change and you're just marking it up in real terms year after year. Housing has perhaps been Grantham's track record reckoning as it continues to hover near all-time highs despite his repeated warnings of an imminent implosion. Grantham argues the US economy can weather dramatic drops in the stock market, as evident by the merely mild recession that surrounded tech stocks blow up during the dot-com bubble. But when it comes to a housing crisis, he says, the economy is unlikely to come through unscathed. The dot-com bubble of 2000 showed you can just about skate through a stock market event, but Japan and 2008 showed you can't skate through a housing crisis. So let's pull back for a second and look at the reaction to Grantham's repeated warnings over the years. This article is from June 3, 2021. Grantham is a prominent bear, or someone who believes prices are about to fall. Many investors have come to discount his pronouncements, given that stocks have consistently hit all-time highs over the past year. In September of 2021, Grantham said, "You knew last year this bubble was going to be the real McCoy, but you didn't know if it was going to break next Wednesday or a year later. One by one, we've checked off every condition that a glorious bubble needs in terms of crazy behavior. This has been crazier by a substantial margin than 1929 and 2000. Grantham warned the bubble could burst at any moment and predicted US stocks would see double-digit losses within a matter of months. He also said that our forecast is to have a negative return on US stocks over the next 7 years. I strongly believe that this will be accurate." He continued with, "US equities are in a magnificent bubble. Real estate is magnificently overpriced almost everywhere, and the bond market is at a 6,000-year high in terms of low interest rates and high bond prices. US house prices are at a higher multiple to family income today than at the peak of the housing bubble in 2006. This multiple is even higher in places like Australia, Canada, England, Hong Kong, Shanghai, etc. This is a global housing bubble." In that same interview, he said that the US is extraordinarily powerful in venture capital. It raises a lot more money, it has a lot more enterprises, the quality of the whole industry is much higher, and the society is more attuned to investing in risky enterprises and forgiving people who fail. The US has a death grip on the great research universities, which are critical to venture capital. The problem in a broad, overpriced world like this is, what the heck do you own? I would try and get some exposure to the green world and the VC world, not that they will escape completely, but they will bounce back so much bigger and better than almost everything else. The green side of the universe has an incredible wind behind it, so own some of that and avoid the US like the plague otherwise, Grantham said. Grantham also touted Japanese and UK stocks and overseas value stocks as compelling investments. Silicon Valley Bank, while affected by new factors like higher interest rates, leading to a meltdown of its fixed income securities balance sheet, speaking of their loans, SVB primarily lent to venture capital firms. This chart shows at the end of 2022, 55% of its loans were to large VC firms like Sequoia. So perhaps Grantham is right here, in that riskier investments like those pursued by SVB is more the norm. And while the facts Grantham references are true, nonetheless these bubbles haven't popped yet. As Grantham says, quote, "When the decline comes, it will perhaps be bigger and better than anything previously in US history." On July 20th, 2022, Grantham warned a looming slump in corporate profits would send stocks tumbling again, and suggested the S&P could plunge by another 25%. Grantham estimated the S&P 500's fair value in a year's time would be around 3,000, and emphasized it could trade below that level for several months. Right after this bearish call, the S&P would go on to jump almost 10%, then in August drop 15%, only to recover it back. Grantham at the time also said that it's likely that there will be considerably more pain before this is finished. The market downturn could last anywhere between 6 months and 3 years. Historically, many people who buy into bubbles don't make any money for a decade, he added. In January of this year, Grantham warned that the global housing market bubble was already underway, as high mortgage rates make it unaffordable. He warned that housing bubbles take about 2 to 3 years to completely form. His statement said, "The bursting of the global housing bubble, which is only just the beginning, is likely to have a more painful economic knock-on effect than the decline in equities is having, for extreme bubble pricing in stocks has been confined to the US only." Grantham warned about the possibility of a market crash in 2020, 2021, and also in January of 2022. However, his warnings were largely disregarded by investors and strategists, as Grantham believed the S&P 500 was poised to experience a 50% plunge. Grantham once again issued a warning in January of 2023. In a recent letter to his clients, Grantham wrote that the S&P 500 could plunge by about 17% to 3,200 this year, or about 20% after early gains so far this year. However, Grantham warns that the outcome could be far worse if the global economy topples into a significant recession. He wrote, "Regrettably, there are more downside potentials than upside. In the worst case, the market could fall a stomach-turning 50% from here." In other words, the market is still overpriced in his opinion and has room for a significant correction. Grantham suggests that investors shouldn't be tempted to think that this kind of drop is uncalled for, given that empirical evidence shows otherwise.
We will have a recession running perhaps deep into next year, and an accompanying decline in stock prices. Inflation will never be as low as it averaged for the last 10 years, that we have re-entered a period of moderately higher inflation.